Hey, how's excuse me? How's everyone doing? Appreciate you joining me for this live stream here today. Wherever you may be, should be 9 p.m. in the eastern half of the U.S. It's 9 a.m. here in Singapore Monday morning. So appreciate you being with us. Let's see who's out here. Faith is all that's needed. Amen. Amen. I like that. How you doing? Seymour Rivers, how you doing? Elon Musk is buying Uganda. Okay. Harold B, how you doing? So I appreciate y'all being here. What we're going to be taking a look at is we're going to be taking a look at dollar strength. You know what's going on with this. There's inflation going on around the world. Take a look at a few places. What's going on, and then we're just going to revisit what gold and silver should be doing in inflationary environments. And all this is kind of leading up to, we're definitely looking at stagflation coming down the road. So again, just want to take a look at the dollar strength, inflation, and then of course, a little bit about stagflation and what does gold exactly do? What should it be doing? So we'll be taking a look at these things. Um, Twitter, we'll be taking a look at that. A few items on Twitter. I tell you, the world is definitely on fire. And then, of course, we'll be visiting Rick Rule, his interview, and see what he had to say. A few things there. So I'll be with you guys shortly. Just let me get in a few more sips of coffee, and then we'll get going with this. So again, Tweety Bird 495, Chris Primer, how you doing? Carrie Ellen Wilder, Revere and Fry, Seymour again, and JW. So I'll be with you guys shortly, and we'll get this thing started in just a bit. Thanks for joining me again. Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our weekly live stream. Again, thank you for joining us. Seymour Rivers, thank you on the sound check. So again, Paul Bar, Ernest Blackmore. Yeah, first time I've seen you here. Welcome aboard, Ernest. Appreciate it. So we'll go ahead and get this started. Aloha to one and all. Thank you for being here. Our upcoming guest, I think you folks may be familiar with him. We tried to interview him last time, but we had some technical glitches. He is going to be Charles Nenner coming up. But first of all, again, if you looking for us on the web, silverbullion.com.sg is our website. Yes, we do sell gold and silver, platinum, palladium, things like that. We do store as well. We own our own vault, so this is not a third party vault. Very important. And if you know what's coming down the road, you know you're going to need some form of wealth protection. So definitely do contact us, shoot us an email, sales at silverbullion.com.sg, and we can go ahead and let you know what we can do to help as far as wealth protection. Silver Bullion SG is where you can find us on Facebook. Silver Bullion PL for Private Limited is where you can find us on Twitter, Instagram for young and old. Silver Bullion SG is where you can find us there. Audio only versions can be found on bit.ly slash iTunes or bit.ly slash Spotify. And Crisis Tracker, if you have that Telegram app, go ahead and search one word Crisis Tracker. Okay, so t.me slash Crisis Tracker. It's a free group. And this is where Vincent and I, good morning, Vincent and I go ahead and we will post articles as it refers to gold, silver, economics, finance, things like that. So do join the group. I tell you, there's a lot of things out there, and we are definitely trying to sift through the weeds for you. So, yeah, join the group, and we'll see, how we can all help each other out there. So again, moving over to our upcoming guest, it is going to be Charles Nenner. So I think a lot of you are already familiar with him. Founder and president of Charles Nenner Research, Mr. Nenner has provided his independent market research to the following entities all over the world, including hedge funds, banks, brokerage firms, family offices, and individual clients. He's previously worked for Goldman Sachs and Company in New York from 2001 to 2008. So he really understands, Goldman Sachs and those guys in Wall Street and what's going on. And he's initiated a system of pattern forecasting and securities analysis and developed a computer program which takes many indicators into account, including his use of proprietary cycle analysis. I know if you've Ever watched Charles Nenner before he talks about his cycles. So please do subscribe so we can notify you when this comes up. And of course, hit that bell. And thumbs ups are always appreciated, as are you. Always appreciated. Moving over to our ebook thank you or our Amazon gift card thank you giveaway. We'll be offering up to a $10 gift card for our winners. We'll be giving out up to five, I should say, on this live stream. And if you would like to win this card, house rules, be one of the first five to answer correctly in this live stream. You know how it goes in this live stream. You got answered. You're going to have about a minute and 30 seconds before that timer runs out. US winners, you'll be given a link to download the gift card. Non-US winners, you may have to contact Amazon and let them know that you may need to make some sort of different arrangement for that gift card if it doesn't work in your country. And of course, provide us an email during this live stream. Should be sbtv at silverbullion.com.sg. So what'll happen is my colleague Vincent, he'll also let you know to contact us so we can go ahead and get that gift card to you. So let me take a quick look at the comments here. Joe Lehote, welcome from Atlanta. How you doing, sir? Let me see what else is out there. Okay, looks like all is well with the comments. Okay, so here we go. The question. The question is going to be: it is odd that you see strength in the US dollar accompanied by relatively strong blank prices simultaneously. And this came from the Rick Rule interview. So if you had a chance to watch it, this is where the answer is going to come from. It is odd that you see strength in the US dollar accompanied by relatively strong blank prices simultaneously. So go ahead, give it a shot. Give it a shot. You never know. You just might get it correct. So let's see. Tom K, how you doing? Yeah, Mr. Mr. Nguyen. Yes, weekly potluck dinner. That'd be good. So go ahead and take a shot here. It's odd that you see strength in the US dollar accompanied by relatively strong blank prices. Okay, so we see some things coming in. Mr. Nguyen, commodity. Okay, what else is out there? Fuel, oil, weak. Seppa J says metal. Pabar says fuel. Seymour Rivers says gold. What else is out there? JW, precious metals. Carrie Ellen Wilder missing out on the road trip. Yeah, I got to get those road trips going. Maybe we can, I'll try and pick up on those. John O'Keefe says gold. Ernest Blackmore also says gold. Patrick Bateman, hi. JW commodities. And okay, so a few more seconds. Um, let's see what else is out there. Okay, so that's gonna be it. Okay, that's gonna be it. So we got four winners, four winners, four winners. The answer is gold, as you can see there. And the four winners are going to be Seymour Rivers. Seymour Rivers got it with gold. JW, precious metals, close enough. John O'Keefe also says gold. And Ernest Blackmore, first time here, I believe, and he got it right with gold as well. So congratulations to the winners there. And just to make sure, no, the answer is not butter, but butter might be getting up there in price wherever you're at. But just to make sure, we're going to revisit that Rick Rule interview where he did say gold.
I would expect that the strength in the US dollar might continue for another 6 months, provided that the Fed can continue to increase nominal interest rates while other societies don't have the ability to do that. It is odd that you see a period that has the strength that we've seen in the US dollar that is accompanied by relatively strong gold prices simultaneously. Generally, when the dollar does well, gold does very poorly. And to see the dollar hold its own in dollar terms means that gold is in a raging bull market. If you denominate it in Turkish lira, in Japanese yen, in Chinese renminbi, in the pound, in the euro. And I think that's important to note that.
Okay, so just to clear up, yes, Tweety Bird, you are added in there. Tweety Bird, yes, you did say go first. So, okay, we got those 5 winners. So I think Vincent has documented it as well. So, all right, good to go. So, Rick Rule, interesting what he had to say. Strength of the US dollar may continue for the next six months. Okay, may continue for the next 6 months is how he sees it. It's odd that you see strength in the US dollar accompanied by relatively strong gold prices simultaneously. And notice he said the word relatively because I think for a lot of us we're kind of seeing, gold and silver, taking a little bit of a beating during the strong dollar period, but you can't just look at the days or weeks. If you ever zoom back out on these charts, you're going to see that gold and silver, they're still doing okay. So hang in there, and we'll talk about that in just a bit. So Rick Rule, he sees a strong dollar continuing. So what are your thoughts on this? I'll look for your thoughts, and I'll play another clip from the Rick Rule interview.
There's no absolutes in life, I've learned. There's only probabilities. And the probabilities are, unfortunately, that precious metals are going to do extremely well. I say unfortunately because precious metals have had a role for a millennia as insurance against the failings of government inspired savings and credit instruments. So if the tailwinds eventually change investor behavior so that demand for precious metals and precious metals related assets only returns to mean, demand for those products will somewhere between triple and quadruple. My suggestion is that we're going to see massive disintermediation in the long-term debt market. And while I don't think that all that money is going to flow into gold, I think enough of it is going to flow into precious metals that precious metals at least resume the market share that would suggest a 40-year mean, which is to say between 1.5% and 2% of the total value of savings and investment assets in the United States. If that would occur, I think that you will see a dramatic bull market in precious metals.
All right, so Rick Rule laying it out. If we do see more people come back into metals, just even 1-2%, you are definitely going to see a gold and silver run. So something to keep in mind. We're still kind of at there where I think about half of a percent of people are actually into metals. So there's still room for us. There's still room for us to keep going and take advantage of these prices, even though we may not be happy with them, because we've been in gold and silver for a while. We've seen it up and down and down, 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 and a little bit of up here and there. Accumulate as much as you can. So there's no absolutes in life, only probabilities. Is what Rick says. And the probability, unfortunately, is precious metals will do really well. Now we like that, but it's gonna come with a few hiccups along the way, or a few hitchhikers along the way. They will do well because they are an insurance against the failings of government fiscal monetary policies. And demand for precious metals will triple and quadruple if these assets return only just to their mean, and that's just kind of like on average what things used to be, so to say. But if more people pile in, you're going to look at prices triple or even quadruple, according to Rick Rule. So keep an eye on it. Let me take a look at a few more comments out there. Um, yeah, okay. Um, yeah, Mr. Nguyen. Sorry about that, Mr. Nguyen. He says, let me get this in there. Now, gold is still a good buy despite the strength of the dollar. The dollar is liquid, whereas physical is not. The paper market is at high risk volatility. Paper market, definitely. ETFs, there's a difference between ETFs and physical. And unfortunately, it's that paper price that's controlling the physical price. So, again, this is another reason why when people talk about bifurcation, when we have a separation of the physical price and the paper price, things are really, really going to unwind really, really quick, most likely in physical's favor. So moving on, another clip from Rick Rule.
It's interesting to me, Patrick, that many people value their gold in dollar terms, which is to say they value an asset that for 1,000 years has been a store of value, a medium of exchange. They value it against an artificial construct, the US dollar, a floating abstraction. I try about once a quarter to recast my own personal balance sheet and income statement in grams. That is, I'm trying to teach myself at age 69 to have the constant in my own portfolio, both my balance sheet and my income statement, in gold rather than dollars. I haven't managed to change my mind to do that yet because when I go to the store, stuff isn't priced in grams. But it's very useful to begin the process of programming your mind to at least consider your finances in the context of a constant rather than in the context of a floating abstraction.
Yeah, that's pretty interesting. I mean, first of all, why do we value real money? Real money being gold and silver. We value it in fiat terms, and I understand it's priced in it's priced in fiat, right? It's priced in a non-backed paper. But why do we even value it in that unbacked paper when we know we have the real money? Now, I've done this. I'm sure a lot of you have as well. You've gone to the store and you've seen something priced at, let's just say, $50 and explain to yourself that the product I see, hey, that's worth about 2 ounces of silver. Now, do I want to go and buy that product for $50, depending on what it is, of course, or do I want to go and pick up 2 ounces of silver? Most of the time, I'm gonna pick up that 2 ounces of silver. But how many of you guys do that? You're actually at the mall or something, and you look at things, and then in your mind, you're working out the silver price. How much is it? How many ounces can I get of silver compared to whatever this person or this shop is selling this item at? So I'm curious, how many of you guys actually do that? I know, I know that I do for sure. All right, moving on to Gerald Celente's Trends Journal. His recent trends journal this week, we'll look at its weekly message: 9 trillion in losses and rent a home and go broke. So those two articles we'll look at. The mainstream Western media, which has long proved itself to be nothing more than the communication arm for the government, did its best to push the propaganda to the public at the onset of the war that Russia was losing in the Ukraine. There were reports of Russian troop desertions and major victories by Ukrainian forces, and the losses were due to a catastrophic miscalculation by Russian President P. I'll just say, in case Mr. YouTube is out there, who thought country U would lay down its arms when his tanks began to roll. And the U military decided to fight, and Zelensky, the president, became an overnight sensation. The West, seeing that it had a willing army to take on the Russians, quickly vowed to support Kyiv with tens of billions in aid and equipment. Now, Russia has been pounding targets across the eastern region of the country and has taken control of several cities. Donetsk's governor urged, might be mispronouncing that, sorry. He urged about 350,000 residents to flee as Russian troops closed in. And as the Trends Journal cover illustrates, no peace talks allowed. Now, while Russia continues to overtake swaths of the country, British Prime Minister Boris Johnson took to Twitter to voice his confidence that Ukraine's military would be able to retake territory that was seized by Russia. And the UK remains committed to helping Ukraine defend itself and rebuild. He posted on Twitter, more Ukraine military aid will arrive soon. It's kind of interesting he stepped down, though, correct? So, anyway, let me continue on here. We are in for a wild ride into the future. If these trends are not reversed, we will head into a socio-economic and geopolitical nightmare, the likes of which will be unprecedented in recorded history. So, Gerald laying it out in his weekly message. 9 trillion in losses as U.S. stock markets booked their worst first half of a year since 1970. Investors lost more than 9 trillion. Bloomberg has calculated from S&P data tracking small, medium, and large publicly traded companies. The Nasdaq has shrunk by nearly a third this year as of 30 June, with the S&P's 500 index losing about 20% of its value in 2022. 10 of the S&P's 11 sectors are down. Consumer discretionary stocks have fared the worst, surrendering 32% this year to June 30th. Only energy stocks have avoided the plunge, adding 30% during the year's first half. The market mood is very negative, dominated by the possibility of recessions in the US and Europe, says a French asset manager. And things are no better overseas. Europe's stocks 600 index dropped 17% from January through June. MSCI's Asia Pacific index was 18% smaller. And rent a home and go broke with mortgage interest rates rising and home prices, remaining at record highs amid a persistent shortage of houses for sale. More prospective buyers are becoming renters of single family homes. The median sale price of existing homes edged up to 407,000 in May, another record according to the National Association of Realtors. Meanwhile, the average interest rate for a 30-year fixed rate mortgage hovers near 6%. And this is something Bill Holter and I talked about. 6%, the highest in more than 10 years. And rates began this year barely above 3%. The combination of higher rates and record home prices has added $513 to the typical monthly house payment for new buyers. Single family landlords say they are well positioned as more would be home buyers have little choice but to rent. The Wall Street Journal noted the more rates go up, the better it is for this business. Bruce McNalish, CEO of landlord of Kinlock Partners, said at an industry conference back in May. Now, because of supply and demand, we are raising rent roughly 15%, which is below our peers in many areas. He noted rental rates were up 14% in April, year over year, marking the 13th consecutive month in which rents rose at a record clip, data service CoreLogic said. Now, the shortage of homes driving up prices higher is unlikely to ease. All right, it's unlikely to ease. New home starts declined 14.4% in May from April, the U.S. Commerce Department reported. Last slide here. Mortgage rates are set to climb steadily, and fewer buyers are able to afford to buy a house, sending home builders' confidence in the housing market lower in June for the sixth straight month, lowest level since 2020. Contrast, 74% of single family home landlords expect business to remain strong or even improve for the rest of the year. Now, Invitation Homes, a subsidiary of private equity firm BlackRock, reported its rental rates are growing faster so far this year than they did last year. Okay, I think we can end it there. So that was a look at Gerald Celente's Trends Journal. I mean, I think we're going to see home prices rise. I can tell you here in Singapore, just to share, uh, we're going to be moving to a different place, and we're looking at about $800 a month increase in rent. So I can tell you, it's not just the U.S. It's probably all over the world. So let me take a look at a few comments here before we head on, and we'll take a look at our website. Um, yes, happy Sunday to all. It was interesting that Boris Johnson, he did step down, correct? Um, let's see. Well, let me see what else is out there. Okay. Yeah, I'd buy silver also. So I see a lot of you folks would end up buying the silver. I would as well. So speaking of silver, let me head on over to our website, silverbullion.com.sg. This is where, again, you can buy and store precious metals. And of course, as mentioned, we do specialize in systemic wealth protection. So let me just refresh it here. Take a look at the gold and silver price here in Asia. This is Sing dollars. Let me put it back in US dollars. Okay. So we're looking at silver 1932, so a little bit down this morning here in Asia. Gold 1741, slightly down here in Asia as well. So both metals hitting a bit of headwinds going into the week. Let me just take a look at what we have going on here. 100-ounce bars, just $1.50 above spot. Okay, so JM bars are they're always a favorite of a lot of people. They're just $1.50 over spot, so that's good. And then of course, 1 ounce Canadian maples, $40 above spot. So it's a very good price. That's a very good deal. So okay, if you're looking for these 100-ounce bars and maples, you are in Singapore, come down to the shop and get it. Or if you're storing with us, go ahead and get it as well and keep accumulating. So again, silver 1932, gold at 1741, If you speak a different language, if you speak French, if you speak German, just go ahead and contact us, and we'll go ahead and send out an email or contact you in your language. So we're trying to be more international because you folks are international as well. And taking a look at that ratio, 90 to 1, what this means is when you look at the price of gold and silver, it takes 90 ounces of silver to equal the price of gold, which definitely means silver is undervalued right now. If you're trying to decide to buy silver or gold, this ratio or this chart may be kind of nudging you that silver is where you want to be right now. And of course, featured products, we just had those that are on sale. So let me just back up to these here. Um, Let me just go ahead and click on this. So again, the 100-ounce bars are on sale. You can pick them up from the shop. There's 38 for you, 460 in the vault. If you're storing with us, the 100-ounce JM bars, 17 in the shop if you want to pick them up. And all right, unfortunately, these were bought up already locally. We still have 20 more in the vault. So if you'd like to buy these bars, let's just say this JM bar, and if you'd like to store it in the vault, you would need to sign up as a user. Six types of accounts: personal, joint trust, joint account with the miner, business account, and a precious metals IRA. I think we're going to be taking a look at this more coming down the road because there seems to be a little bit more questions and a bit of more of a demand for these precious metals IRA. Uh, but a personal account, simple account, we just need basic information, just your name, your country, where you're from, preferred currency, and that is because in case you want to sell it, we can go ahead and wire the money to you. So that's what the preferred currency is about. Um, Again, just basic information, and as a reference, go ahead and come all the way down to YouTube SBTV. That helps us out quite a bit. And again, once you start storing with us, you can absolutely go ahead and use your gold and silver if you want to be collateral, and go ahead and take out a peer-to-peer low interest secured loan if that's your wish. As an example, we can see, let me see down here. This one here, somebody's looking for a 6-month loan in US dollars. He'd like 10,000. He's asking if he can get it at 3%. And we have quite a few people here who can actually do it for him. 20,000, 12,000, 100,000. And a lot of people out here can actually go ahead and make this loan. They're asking for a little bit higher interest rate. So eventually, what will happen is these two will kind of meet in the middle somewhere, and that loan can be done. And as I said, you would need to be storing with us. In this case, these are some of the silver items that are being used as collateral. So 5 kgs, or 5 1 kg bars. Let me see. No, 1 5 kg bar. Excuse me. So he's put these things up as collateral for that loan. Now keep in mind, he still owns it. All during this time, he still owns it. It is his. He still owns it. Then he'll just go ahead and pay off the loan and interest, and that's it. These items are cleared and they can be used as collateral again. He can even roll over that loan if he wishes. So one reason why a lot of people do choose to sign up and store with us. Moving on to Twitter, a lot of things going on, and uh, the world is just on fire right now. My Twitter feed is just blowing up with crazy things going on all over the world, and rightfully so. I mean, things, they just aren't right. So protesters broke through the front gate of Sri Lanka's central bank. So they are directing themselves to the central bank. Now, first they went after the president, I believe, had a swim in his pool, and now they are going after the central bank. Jayant Bandari, he had some strong words for Justin Trudeau. I mean, I think a lot of people are kind of, in their opinion, he's just not in sync with the people anymore. There's some different plan going on in Canada that a lot of people don't like now. Let me see what else is out there. Market Sniper, he is saying Germany is in a trade deficit. First time in 31 years. Good luck, Euro. If Germany is not making a surplus, nobody in the entire EU zone is. Cost of energy bites hard. So that's coming from Francis Hunt, Market Sniper. Now, this one we have to really watch in Germany. What's going on there? Dan Collins, past guest. Explosion at natural gas plants at the export facilities, which had all the LNG bound for Europe. I don't know if this part is true, but according to Dan, had all the LNG bound for Europe. That's something that is something. So massive explosion at a natural gas plant in Oklahoma. So we'll see what happens with this again. I tell you, a lot of things are going on. Again, Sri Lanka, a lot of people. This is when they were at the presidential compound, just waiting to get in. But I think the president had already fled at that point. And we're also going to be watching this. JP Morgan's big hitters of gold market face trial over spoofing. Now, we've said this, all of you have said this for quite a long time. Markets are manipulated. Companies like JP Morgan, they are being accused of spoofing the markets. Uh, Basically, it's kind of like fake trading to sway the market, putting in orders that aren't real, just trying to shake up the market. So entirely illegal. So we'll see how this thing pans out. Lynette Zhang talking about what happened in Canada, experiencing a widespread network failure in its wireless and internet service, causing payment systems and automated teller machines at banks to go down. So again, I mean, there's just so many things happening, and then of course we got Biden who's reading word for word off the teleprompter. Is You know what? So much going on. I sometimes I got to take a break from it as well. I mean, all of these things they just really start to pile up in your mind, and your gears start spinning and smoking, and too many things going on. So I'd rather take a look at your comments right now. Let's see what's going on out there. Um, yeah, 4-9 finds Sri Lanka and at least 3 other countries in complete free fall, signs of what's to come. And that's interesting because I believe you have Netherlands, the farmers. I think things are going on in Italy as well. I think you got an oil strike going on in Norway, and you had Boris Johnson stepping down, and of course, U.S. President Joe Biden he's just reading teleprompter. So who's really running the country? Um, a lot a lot going on. Too many things are going on, and all happening at the same time. All happening at the same time really kind of makes you wonder out there. And so we are going to move to the topic of the day. Topic of the day: US dollar, inflation, and gold. I know we talked quite a bit about this, but I'll try and hit it from a different angle for you folks. Besides energy or oil, maybe these three things are on many people's minds. I mean, you're seeing the protests all over the place, and a lot of it has to do with things like energy going up, things like inflation going up, things like governments who basically are in it for themselves, politicians in it for themselves, not for the people. So a lot of these things are going on out there. So I want to take a look at the relationship that they have to each other. Now, with the U.S., we know that the Federal Reserve is looking to raise interest rates in an inflationary environment. This is what they do. Raising rates is a historical tool that they use to cool off an economy. But this comes at a high price. Raising rates, and we talked about this before, it's going to slow businesses down. Raising rates may cost people their jobs. It will slow down home ownership, as we saw. New home starts just aren't there. Guys that just that at last year could afford a home, now they may not be able to. So they're looking at rent. So things start to slow down, and that's because when the Fed raises interest rates, loans become more expensive to take on, and that means businesses they can't grow, and if they can't grow, and if they're not making money, can't grow, they may look at retrenching or laying off workers, and again, it just becomes a really big mess. So it'll slow home ownership, and the central bank, they're going to do this to hit you in the wallet and slow down your spending. They don't want you to spend. Okay, stop spending. They don't want you to spend, but hey, you can still buy some silver and gold. So anyway, keep spending if you want to. So your central bank, they're going to do this to hit you in the wallet and slow down your spending. And this is because of the velocity of money. Money is moving too quick. There's too much out there, too much dollars out there that are chasing after too few goods. And that has to do quite in large with the supply chain issues. So ultimately, when the economy slows, that velocity of money slows, which is what the Fed wants. They want, and then a recession comes in. This is the soft landing that they're talking about. They're trying to avoid a recession. I don't think it's going to be avoidable. When this happens, there will be even more job losses. And so I want to take a look at a chart here. Unemployment. This is the unemployment rate. This comes straight from the Fed. These gray bars going up and down, these are the times of recessions. So you can see these gray vertical bars. Okay, these are times of recession. So let's just look at from 80 going onward. Unemployment rate in a recession, this gray bar goes up. Okay, recession, unemployment goes up. I can come to 1990. The gray bar shows a recession, inflation goes up. 2000 gray bar shows recession, inflation goes up. So all the way along, unemployment goes up during a recession. Okay, so we kind of get that, and again, that's because things start to slow down and people lose their jobs, which does have an effect, of course, on the home market as well. And we can see even this thin line. Of course, we know what this thin line represents in 2020. Very high spike of inflation. So every time there's a recession, unemployment rates, unemployment rates will go up. And this year, we've been hearing more chatter about flattening of yield curves as well, and even yield curve inversions. And this is true. The yield curve is flattening, even inverting at times. So what I want to do is show you this chart that was put together as well, and I'll stop it along the way so we can kind of catch on to what's really happening here. Okay, so this chart is showing CPI inflation in red, 7.5%, and that's going to move. And it's showing you the bond yields throughout the days of the months. So we can see bond yields are going up a bit and they're starting to flat. You look at the 2 year all the way to the 10 year, they're starting to flatten out. CPI inflation is going up. So basically, it means if you're into bonds, you're not keeping up with inflation at all. Okay, so let me go back to the beginning here. When you look at the beginning, you see a steady slope going up and to the right. And this is when people, investors will feel that the economy is doing well. The longer bonds, the 10, 20, 30 year bonds, they take up the right hand portion, they're going up, and the shorter bonds, they take up the portion on the left hand side, and they're usually more, let's just say, lower. So a steady slope going up and to the right indicates positive outlooks on the economy. And then you have when it starts to flatten out, you can see here it starts to flatten out, right? We were here going up and to the right, and then the lower end comes up, flattens out with the longer end. Now, this is when people start to feel that, hey, something's going on. I'm not so optimistic anymore. I'm not so optimistic anymore about the economy. And it's a sign. Just look at the bond market; it's a sign, and you can see where even the 2 year and the 10 year, they're almost the same. And I think it even inverted last week. So, and then we can just finish out here, and you can see more of the yield curve is flattening. So again, we started out with that nice slope, and it gets the left hand side, the shorter end of the bond yields gets pushed up, starts to flatten out. Okay, so this is happening this year. So again, key points about the yield curve: incline to the right, economic expectations are good. Flat, economic optimism is falling. This is where we are today. Inverted indicates a recession, a bear market, and it looks like this is where we are heading. So let's keep that in mind. So now you've seen it, the bond market, and what's really happening when these yield curves, or you hear people say yield curves are flattening. That's a graphical representation of it. So when we see these yield curves flatten, which I just showed that it is, and then invert, and it occasionally has this year, maybe more frequently, it's been happening this year. And this indicates a recession perhaps in 6 months to a year, year and a half coming our way. And this is what people, let's say like Daniel DiMartino Booth, other economists have said. When you see this flattening, about 6 months to a year, year and a half, you'll be looking at a recession. So this is coming on. It's coming. It's I don't think there's going to be a soft landing. It's coming on the way. And this is why the Fed needs that runway. Runway is when they will raise the interest rates a bit because they know a recession is coming. So when I just showed you how it's flattening, we see the Fed trying to speed up raising rates. because they want that runway. Runway allows the Fed to lower interest rates during a recession to hopefully stimulate the economy. So they know a recession is on the way and they're going to need to lower rates to get out of that recession. So graphically, now we kind of see it there. And I want to show you what I mean. When you look at the federal funds rate, this is when we hear Powell come out and he announces the interest rate or whatever it may be. So these gray lines, again, they represent times of a recession. Now, with unemployment, we saw numbers go up in a recession. In a recession, we see the Fed funds rate go down. So I'll just start from 1990. This gray bar represents a recession. So we see it go down. The Fed has to lower rates. They went into the recession, let's just say at 8.24 interest rate. Okay. And they came all the way down to let's just say 3.7. So roughly about a 5% runway is what they need to come down. Here they're at 6.51. They came all the way down to 1.75. So again, the runway, they need to come down or lower interest rates about 5%. So here we are today. We're here. If we were to hit that recession today, we cannot come down 5%. We were back here in 2020. We could not come down that 5%. We're only at 2.13. We couldn't come down. We just basically went down to zero. Here we are again. Fed is trying to push this up. It's trying to push this up because they know they will have to bring it back down in a recession. So one thing though, if you notice the tail end of that chart with the effective Fed funds rate, and I'm going to overlay it, I'll show you it here. The Fed really cannot lower rates all that much. And that means the economy will slow, inflation will continue to rise, as does unemployment. And this has all the makings of stagflation. Let me go ahead and show you what I'm talking about. Let me overlay the unemployment rate in red and the Fed funds rate in blue. So again, the gray vertical bars, they represent times of recession. And you can see how they cross, okay? Where the unemployment rate goes down, okay, so people are back at work, and then the Fed tries to push up the interest rate, and then eventually it starts to get too hot, and then the Fed has to bring down the interest rate, and then unemployment rises. And this is the Fed dual mandate: price stability and maximum employment. So they try to get you employed here. Here's maximum employment, but we lose price stability because inflation starts running, or essentially they have to bring down the interest rate. So here's your price stability. So they try to get that price stability, but then employment goes up. And then they have to get back on that seesaw again, bring employment down, raise interest rates. Okay, things look good. And then eventually they have to cool it off again, another recession, bring the rates back down. But that means unemployment goes up. So unemployment, excuse me, is the red line. Fed funds rate is the blue line. The interesting one is, excuse me, when you get to the tail end, you see how everyone they kind of cross over, right? They cross over, they cross over, they cross over. You get to here, they did not even cross over, which in my mind tells me that you're going to see more of a slowdown, economic slowdown, and then you're going to see higher unemployment. And again, these have all the makings of stagflation, where you got that high unemployment, you have that inflation going on, and you have that economic slowdown. So this is the interesting part here, where they did not even cross. Now, some of you may be looking at the left hand side, but this is when we were still kind of on that gold standard. So they couldn't create all the money that they wanted to. There was a reasonable rate of unemployment that went on, but unemployment sometimes it sparks entrepreneurship. Sorry about that. And the markets create the things that we all want. There's no free and cheap money going into the system. And we went off the gold standard, and then we saw all these, crossing back and forth with the Fed dual mandate. But here we are today again, where perhaps there's just too much money in the system right now, and these lines they didn't cross over. So we'll see what happens as it moves on, but definitely all the makings of stagflation coming in. For now, though, compared to other major currencies, the US dollar is doing well and getting stronger. The US dollar is getting stronger because of its high demand. There's liquidity concerns as well. And where something like oil goes up, the more dollars they're going to be needed. Okay, there's still the petrodollar going on, even though it is, sort of being unchained. The links are being broken. There still is that petrodollars where more dollars are going to be needed globally to buy that higher priced oil. Again, that's the petrodollar. Excuse me. So there is a demand for dollars going on. And raising rates also means US dollars are in demand as well, since to service US denominated debt, you're going to need more dollars. And again, this is happening all over the world, where more countries need more US dollars. And even forex traders, they know this as well, and they are going long. They're going long US dollars versus some other currencies. I haven't, excuse me, I haven't checked, but I think the euro is now just about on par with the US dollar. It's getting close to 1 to 1. Wasn't like that before. So these things and other things they push up the value of the US dollar relative to other currencies. However, the purchasing power of the dollar is going down. If you're in the States, you see this. And okay, so you're saying, hey, Patrick, you just told us the dollar is getting stronger. So what gives? Why am I losing purchasing power if the dollar gets stronger? What gives is the central bank of the US. They are not able to produce real goods that the paper fiat dollar buys. So, no matter what measures central banks anywhere in the world take or put in place, they cannot create goods. Okay, they can't create goods. They can't create real things. They can't create the food that you see. A lot of things are going on with food, but they can't create the food. They can't create clothing. They can't create electronic devices. So, in the case of the strong US dollar, if the US doesn't see more imported goods coming from abroad and has to buy more locally, the strong dollar, it's sort of rendered null, and its purchasing power at home starts to lessen because that strong dollar is good against other currencies, right? So if something is made overseas and overseas uses a different currency, then you may see an advantage that the strong dollar has. But if you have less imports coming in from overseas and you're getting more locally, the dollar is basically 1 to 1. It's made and produced in dollars, and you're buying it in dollars, and so you don't really see that strong dollar. So again, and you lose that purchasing power because those dollars are chasing fewer goods. So again, a strong dollar is strong against other currencies. All right, let me take a break here and see some of these comments here. Okay, let's see. Patrick Bateman, Russia, Russia, Russia. Yeah, there you go. Let's see. Yeah, JW, I'm with you all the way there. Whenever I buy something, I always think about the cost in real money. Totally with you there. For some reason, I just can't stop doing that. You're in a mall and you see something. How many ounces of silver is this? It's a weird thing, but kind of fun at the same time. Yeah, freedom for all. I'd appreciate that like button. That really helps us out a lot. Let's see. Um, Holger, I like that style. I knew you were a truther. You can't be anything else, my man. You cannot be anything else. Whether you like truth or not, um, it is the truth, and you have to go with it. Otherwise, what's left? You have to go with truth, and it's hard to find it sometimes, but you got to go with it. Otherwise, like I say, it's nothing else. Um, Good comment there. What else is out there? Um, Carrie Ellen Wilder, my home is paid for, free and clear. I live rent. Absolutely, that is the way you want to do it. Congrats. I salute you there. That's the way you want to do it. Absolutely. Let me see what else is out there real quick before I move on. Um, okay. All right. Let me move on. Sorry about that. So remember, a strong dollar is strong against other currencies. So there are a few things that go into it. Okay, so one good thing the government is looking at, though, but I think they pulled back on this idea, but they were looking at the idea of a tax relief at the fuel pumps. Now, personally, I think a tax relief is the right thing to do. I think this is the right thing to do, and I'll tell you why. Because if a government removes taxes, let's say you go to the pump, you fuel up, there's that added fuel pump tax, right? But if the government removes taxes, No one is going to lose their job, except maybe politicians. But hey, that's another story. But no one's really going to lose their job because the business is not going to feel it, so they can still keep people employed. So I think one way is yes, you start to reduce taxes. People won't lose their job, uh, simply because the business is not going to see a negative effect. As far as I know, they're not going to see a negative effect if they do not, uh, if they're not collecting taxes for the government. So will they do this? Will the government allow this? That's another question, to be determined in time. Of course, only time is going to tell. Time and your voice, and perhaps your vote. But I do think reducing taxes is one correct thing to do. Absolutely. So that's US. What about here in Asia? So, well, governments have been reacting to inflation as well. We're seeing it. I mean, I'm seeing it, trying to rent a new place, I'm seeing it in food and other things. We're seeing it here as well. However, governments here, they've been reacting in a different way. And I'll show you here with, this came out from Asia, or Nikkei Asia. Singapore, Malaysia, Indonesia unleash cash, cash to see inflation. Now, I'm not going to get any of it, but they're going to be helping out their people. So governments attempt to balance political pressures with, I'll explain why. Singapore, Southeast Asian governments have started to roll out another round of economic relief packages to help citizens stay afloat in difficult times, but this time the funding is targeting the fallout from the inflation raised during the bug. Across the region, people are struggling to make ends meet as the war, as well as persistent supply chain disruptions, have driven up the prices of everyday items, with several countries getting ready to hold elections in the next 18 months. Officials have made moves to disperse cash before people vote with their wallets. So, hey, politics, it's almost the same all around the world, right? Give out the handouts before the votes. But anyway, so Singapore has announced a stimulus measure worth 1.5 billion, and that assists households and small businesses. Individuals earning less than 34,000 Sing dollars a year, they're going to receive as much as $300 next month. Taxi drivers and couriers struggling with high fuel prices, they'll receive payments between 150 to 300 as well. So all households will receive a $100 utility credit. In addition, the government will provide financial subsidies for small and mid sized food manufacturers and retailers that adopt fuel efficient equipment. Malaysia is the same. It's the same. Households in the bottom 40% income bracket will receive payments of 100 ringgit, while individuals in that same bracket will receive 50 ringgit payments. And Thailand, government has granted a 3-month extension to ongoing relief measures, which will now run until September. Assistance includes cooking gas subsidies for low income people. Indonesia, cash payments are being directed to roughly 20 million households and 2.5 million street food vendors in response to surging cooking oil prices. So we're seeing it here in Asia as well. And governments are trying to do what they can to help ease things. The thing is, you might be saying, hey, that's inflationary. Well, this is inflationary. They're handing out more money, but there's a difference. If your country is making the real goods, okay, as these countries in Asia are, if they're making the real goods, you can increase the production of the real goods to offset the local dollars chasing them. And this is the difference with, let's say, the states, where the manufacturing base, it's kind of sort of not what it used to be anymore. But those dollars they keep being pumped and pumped and pumped. But the manufacturing base can't offset, or the goods manufactured there cannot offset the dollars being issued. So there's a difference between there and Asia. So therefore, they may not, and I say may not, talking about Asia, see inflation as bad as non-producing country would see. I mean, we're seeing it, but maybe it won't be as bad because Asia can produce. However, their currencies are losing purchasing power against the US dollar. Therefore, looking forward, I can tell you what I've come to understand, and don't mind going on the record to even say this, is that countries that are going to fare better in this global currency reset, reevaluation, transition, doobly doo, whatever you want to call it, they're going to need three things. And these three things I think are key, and we're going to see how they're going to be played out. Three things a country is going to need: resources, refining capabilities, and or gold. The resources are the real things that the world needs. We're seeing what's happening with the war, with what resources are doing and the prices of resources. Refining is also key. Refining is key because countries, they need these raw materials to be turned into usable things and then to be able to produce things. So refining, very important, and that's one thing Singapore definitely is doing. They are a strong nation as far as refining, so they're positioned pretty well there. And of course, gold. And when things revalue, this is why you need to have a store of value. This is why you and me, we may be in the same storm together, and whether we have a canoe or a yacht, we also need to have gold or silver. That is for sure. Definitely, it's going to be helping us out here. So gold, really, when it comes down to it, gold, it's a neutral reserve asset, or do I? But how does it do in an inflationary environment, and the way things are looking for both East and West? If not today, tomorrow we'll be looking to seek some shelter in gold. All currencies are going to run into trouble, including the one in your bank account. Okay, so keep that in mind there. The thing is, gold is very complex. It's very complex. It's challenging because it's hard to predict gold prices in the future. Ben Bernanke, everybody's hero, he even said that nobody really understands gold prices, and I don't pretend to really understand them either. Okay, so that's coming from our hero, Ben Bernanke. He doesn't understand gold prices either. Hmm, wonder why. And lately, yes, we did see the gold and silver price. It did get hammered for sure. The thing is, a lot of analysts will tell you gold doesn't give any returns besides appreciation, and appreciation doesn't always happen. So as a result, gold has to compete against assets that yield something. Okay, there has to be some sort of return. It has to yield something. Now, when the return on the alternate asset begins to rise, the demand for gold, it starts to fall. They see returns happening in other places. And as we see rates go negative, where yields minus inflation rate, or the inflation rate will give you a negative rate, gold typically will become very, very attractive to investors. Now, I showed you that moving graphic where the inflation rate was higher than the yields for the bond. So that means it's a negative rate environment. This is when gold starts to become attractive. Silver starts to become attractive as well. And this is where we have one foot planted today. Thing is, are we buying gold as an investment, or are we accumulating it as an insurance? And this is something you have to keep in mind. You have to understand why you are buying that gold. Okay. So getting back to gold as an inflation hedge, what is an inflation hedge? So this is probably for new guys out there who are kind of considering looking at gold and silver. What is an inflation hedge? Generally measured by changes in the CPI, or consumer price index. It measures the general increase in price levels. It measures the fall in money's purchasing power. An inflation hedge is basically an investment that's expected to increase its value over a specific period of time. So let me take a look at a few comments here before I move on. Just want to make sure I stay in touch with you guys. Um, let's see. Uh, Carrie Ellen Wilder. So what you're saying is that every country needs primary resources. Yes, you do need to have some kind of resources, secondary resources, uh, or at least refining capabilities. So you're useful. You're useful in the global circle of friends. And let me see what else is out there. And sound money gold, absolutely, because your currency, you don't know what's going to happen with your currency. Your nation's sovereign currency, you don't know what's going to happen. So you want to also have that gold, that sound money. Uh, I can tell you here, let's say in Singapore, it definitely has strong refining capability, especially when it comes to oil. So that's a big, big plus. And the government, they recently added to their gold inventory, their gold reserves. So that again is a big, big plus. So you have countries who are doing the right things, looking to do the right things, and then you have countries that are they're kind of stuck, like let's say when you look at Sri Lanka. um I don't know about the gold. They're not really refining. Their main industry is tourism, so they need people to come in. um, and of course the natural resources. Maybe it's the beauty of the place where they hopefully can get tourists in, but you need something. Your country needs to do something to generate, some sort of money, or have sound money. So that's kind of what I'm getting at as we start to go through this global reset, realignment, things like that. So these things I do believe are going to be key. uh, Country needs resources, refining capabilities, and or gold to help keep its currency afloat. So that's kind of what I meant there. Okay, so let me move on here. Gold's unique position compared to other countries. Now, inflation usually impacts commodities that are tied to economic cycles. However, gold is it's sort of placed uniquely compared to other commodities that have a strong link to the economic cycles. Now, what I mean is only roughly about 10% of gold's demand comes from industrial uses. Silver, on the other hand, it's a different story. I don't know the exact number, but silver is a different story. The rest of gold, it ends up being jewelry or investment demand. And it served as money over the centuries precisely because its properties were most conducive to playing that role. Its primary function throughout history has been as a liquid store of wealth, not not as an industrial input. So even when gold is made into jewelry, it's still around. It's still in some way, shape, or form. It's still around today. It's still today in form of a currency in large parts of the world as jewelry. And unlike other commodities which are produced for consumption, gold is produced for accumulation. So this goes back to the idea of when we buy silver and gold. I understand we're buying it as an investment, but we're also buying it as an insurance, which is why we accumulate. We accumulate gold and we accumulate silver. So virtually all the gold that has ever been mined still exists today. This is true. This is true. And gold is a chief member of an asset class of safe havens against the debasement of paper money. We're seeing debasement. Debasement in today's language can be the overprinting of paper money. That's how money is being debased. So gold tends to go up in an inflationary environment. Hang on. It's effective in countries where inflation rates are high and the real interest rates are negative. The scenario makes savings unattractive, and it may sound like you're the situation that you're in. Long-term horizon. So I know you're saying, hey, you keep saying gold is good in an inflationary environment. It is. It is. Gold needs a long-term horizon to match the inflation price. This is where we are. We're seeing the inflation price rise, but gold needs that longer term horizon to overcome and go above. It just needs that longer term, a longer horizon. Okay, simple as that. In short term, there are other variables like the real interest rate and people's confidence in the economic outlook. And these variables could cause inflation to run ahead of gold prices, sometimes vice versa. So you got to remember the Fed has been backstopping the markets for a decade. You got to go back to 2008. 2010, 2011 was the first QE, but the Fed has been keeping the markets up. So gold has to overcome this, and it did. It did a few times. And then, of course, we see the market sell offs, the paper sell offs push the gold price back down, but gold is still hanging around there. And that's the thing to keep in mind. Just zoom out. Don't look at a daily chart, weekly chart, monthly chart. Zoom out and take a look at gold over the decades. You're going to see a different story. Okay. So it looks like where this is where we are today, where the other foot of gold is today. Just give it time. You're going to be on the right side. Just give it time. So in time, though, perhaps a short time, we will be facing stagflation. This is the other issue, though, and this is where we may see gold, we may see silver really start to run. And in fact, what I'm going to do is bring on Silver Bullion founder Gregor Gregerson next week, and we're going to talk about inflation, stagflation, what things like gold and silver do. So mark it on the calendar. We're going to bring Gregor on, and he'll give you his input, and he'll give you insights, as to what's going on in the silver and gold market in Asia as well. So hope to see you guys next week. And that pretty much is the topic of the day, because we're seeing, the dollar's getting stronger relative to other currencies. And we're wondering, Why is the dollar doing so good? Well, because things like oil are going up, and there's a demand for dollars. There's liquidity concern, so there is a demand. It doesn't mean that the dollar is going to overtake and overrun everything. It's just that during this time there are concerns. Other countries aren't doing well economically. They have inflation as well, so their currency doesn't do as well against the dollar. And so, again, it doesn't mean it's necessarily getting stronger. It could just mean other currencies are getting weaker. So, it just depends how you want to look at it. So let me take a look at a few of the comments here. Um, let's see. Uh, I tell you what, belly dance, Rabia R. When the BRICS nations declare their new basket of currencies, bye dollar, very real. That's a very, very real concern. That's an excellent point. It's going to, it may be backed by resources, commodities. It may be just backed by more trust. It may be backed by how a government is doing, or let's just say if one government is doing worse than the other, you may not want to be in that government's sovereign currency. So that's a very strong point when the BRICS nations do really really step it up and come forward. Dollar could be in a bit of trouble there, which is why you want to be storing dollars or currencies in gold, in silver as stores of wealth, just in case these things happen. Whatever happens with the currency is one thing, but your gold and silver is storing the value of it. So again, it's the reason why you need to consider this. Um, good question here. Where does SBTV see the price of gold and silver going if the war in Europe expands? Um, that one's kind of tough because again, if you price it in any currency, it's tough to say, But all I know is it's going to store the value of any currency, being a neutral reserve asset, and when it's all said and done, and when gold is revalued to whatever it's going to be revalued at, whether it's a commodity to commodity basis or if they use it as some type of a back end of a currency, when it's revalued, you're you're going to see the fruits of your labor. You're going to be in a much much better position. Can't tell you the dollar amount, but I do know that when it's over, when it's all said and done, you're going to be in a much much better position. So for me, like I say, I've never bought an ounce of silver or gold as an investment. I've only bought it as an insurance. So that's a great question there, though. Let's see what else is out there. Um, let's see. Okay. All right. Let me just move on to commentary here. Stay the course, guys. Just stay the course. We look to position ourselves very well. I mean, gold and silver, they're going to do what they are made to do. They are going to do it. Man, machines, on the other hand, they do control the markets for now. For now, they do control it. Is it sustainable? No, it's not going to be. We're already seeing the world unraveling all over the place. And a lot of it has to do with money. A lot of it has to do with money, inflation, things like that. So it's not sustainable. The markets, they're eventually going to break. They're going to break. Currencies will break. Assets, some types of assets, they look to break as well or devalue or lose a lot. Again, you go back to 2008. Before all of this happened, stock market was only at about, I believe, 8,000 points. So some people do believe when all of these things are corrected, you'll be back down somewhere close to that 8,000, and that is just unimaginable right now at this point. So you can imagine the devaluation of all of these assets that could very well happen. So whether you have a yacht, as I say, whether you have a yacht, a rowboat, a canoe, or a rubber ducky inner tube, we are all in this storm together, and gold will do what it's made to do, so will silver. And that is to keep us afloat, keep us dry. Gold is your ark when the flood of inflation and stagflation breaks down the dams of money printing and paper currency. Just stack them high. Keep stacking them high. So that's going to wrap up the program. I'll take a look at a few more comments out there. Um, Okay. I mean, I hope this, helped out a bit. I mean, we could see how the yield curve is flattening. We could see how inflation is rising. We could see in times of recession, unemployment goes up, and they try to bring down the Fed funds rate, which is why they're trying to speed it up and increase that runway. Raising the interest rate so they can bring it back down. So, I mean, hopefully this helps some of us out here. Real estate prices, that is going to be interesting. Um, we could be at the top. Definitely could be at the top. And I think, as Bill Holter pointed out, just last year, if you were trying to buy $1 million home, let's say you qualified for $1 million home at 3%. This year at 6%, you may not qualify for that $1 million home, which means the pool of buyers is already getting smaller. So when people try to sell, they're going to see that they're not going to have as many offers to give their selling price. So keep an eye on that real estate market. And I tell you, as interest rate rises, the pool of buyers will become less and less. And if inflation rises, trying to pay that monthly mortgage, which is already, just because of inflation, you're paying 500 plus or so dollars a month more. It's going to start to bite into your mortgage payment, and people may not be able to hang on or pay for that mortgage. So it's going to be, hey, it's going to be really rough. Okay, anyway, I keep promising you guys I'm going to give you good news. One day I'm going to give you good news. Maybe Vincent, he'll do this one day, and he'll be our good news. Okay, so let me see what else is out here. Um, yeah, William, um, we are invited to trust in truth. Yield our burdens with our mutual friend. Yeah, I tell you, not sure I entirely understand that meaning, but the meaning. But the thing is, we have to look for it. We may not like it sometimes, but it is what it is, and sometimes we will like it, but it is what it is. As Rick Rule and a lot of other guys have often said, whenever you're investing, you have to take your emotion out of it. And in this case, you're investing in your life. You're investing in your family's life. So sometimes you got to take that emotion out of it and take in the information, whether you like it or not, to be able to make that best decision. So it's an investment for your life right now. Don't ever forget that, all right? Because we're, like I say, we're all in this together. Except some of you have yachts and I have a canoe. So anyway, um, so I guess that'll wrap it up here. I do appreciate you guys being here with me. A lot of great comments. If you do have questions about gold and silver, wealth protection, things like that, just go ahead and send us an email, sales@silverbullion.com.sg, and we'll walk you through it. Whatever your concerns are, let us know. We'll walk you through it. We'll try and help you out the best we can, but always in an honest fashion. It's this is trust is the main thing right now. Trust is more important than any um, fiat currency right now. So it's all about trust. Okay, so I think that'll wrap it up. Brock, I appreciate the comments. I've learned a few more things. I tell you what, each week when I put these things together, I do as well. So hopefully, we all can kind of learn together and get through this together. So as I always say, be a blessing, not a burden. Just understand what's going out there. Take out the emotions when investing in your life, in your family, and I'll see you guys next week with Gregor. So have some questions if you have any questions for Gregor Gregerson, the founder of Silver Bullion. I'll see you guys next week. And as always, saddle up for what's coming ahead and silver up as well. Take care of each other.